What's up, traders? Welcome back to Krabi in Thailand once again. Today I want to share with you a framework you can use to kind of plan your trades and execute them right. So we'll go step by step through everything I did myself when I was trading manually to go through the trades, take them, and what happens after. So that kind of is a good process. And if you can do this right, chances are you will take less bad trades, more winning trades, and your results are going to improve pretty fast. Alright, so first of all, behind every single winning trade I had and every single winning trade you should have that are good trades, there has to be some sort of plan. Now that means that you will have to create a plan first, and the plan is like the foundation to everything. That's why people need to create trading plans. And for me, I resisted this idea for a long time to create a plan. I didn't want to do it at all. The day where I created my first plan, I didn't know what to put in it and what I needed to have in that plan. Now if that's your case now, I'll put below a video on how to create your trading plan so you can watch this and you can go through this. But the principle is that you want to create a plan of steps and action steps you're going to follow. Then once you have that, you have no ways to kind of go against the plan. Now if you go against it, that's only because of your actions and yourself, and you need to work on yourself. But if you don't have a plan, then how can you create a profitable trading strategy? Because like you have no rules, nothing to align yourself to, and nothing to follow. And that means you can do anything you want, and inconsistency in your actions will lead to inconsistency pretty big in your result. So you want to keep that in mind. Now once that's done, create for yourself a weekly review schedule where you go through the charts weekly. You decide what kind of criteria you could look for every week, and that might be the zone, that's some indicators that you look at that you want to kind of find where they're at and stuff. But define your plan, maybe even at the back of it, define what is going to be your weekly review routine. Define that in your plan, and then do that weekly. So go back on the charts weekly, every single week without a fail. And if you fail, make a note of it. Oh, this week I failed. That's going to be in your journal, which we'll talk about later, or in your weekly reviews that you do. So that's allowing you to kind of keep a grasp on the market. And for me, the weeks where I don't review the chart, so kind of forget, and I say, well, oh, I didn't look at the chart this week, chances are I'm not that top notch when I look at the chart daily. Okay, so I need to have this kind of weekly review to keep that in mind for the week and to just stick around the whole week. Now you might see it's going to be different for you, but in most cases that will be the same. You will see a big difference in your weekly reviews if you do them or not. Okay, so that's the very first thing after your plan. Then we need to talk about the daily and the hourly reviews. So every single day you should have some time where you look at the chart. Could be 30 minutes in the morning or in the evening, whatever you prefer. It doesn't make a big difference from what I've seen. I used to do morning in Canada, I do evening here, pretty much the same. Okay, no big difference. But these daily and hourly reviews allow you to kind of get an even better grasp on the chart, so you know exactly what's happening. Now days where I don't do a daily review are days where I don't take the right trades, or I skip trades, or I forget something. Okay, so you want to do that daily review to see what you could trade for that day, what is likely to happen, and what you need to look at closely every hour of the day, or every 4 hours, whatever you decide to trade. Also, you want to put for yourself some alerts, if you can, of like what levels you gotta watch, or what setup you gotta watch closely. And that's the next step. So once you get the setup alert, that's where you need to take action. Now if you don't get it, don't take action. So either you use a tool like our tool, the trading assistant, to be able to get alerts for your trades. We can customize this for you with your rules, link below for that. Or you just decide for yourself that you will look at the chart every 4 hours or every hour or whatever time you decide. Or you set alerts on your platform. Like MetaTrader 4 has a system for alerts that's not very good. TradingView has a system that's okay, but still, you can still use that if you want. That works fine. Okay, now you get those alerts. And those alerts will tell you, well, now you gotta set up for your trade. But you might have some more rules to put in. So for example, for me in my case, I enter, let's say, beyond a high of a candlestick or below the low. And that means that if I get an alert, I'll put the alert when it cannot close, not when we break the high or the low. So that I get some time to go back at the chart and look at the chart properly. Now if you just put like an alert where it's time to enter the trade, you might enter too late, and chances are you will in fact enter too late. So put your alerts before that a little bit, so you can know like, okay, so now chances are there's going to be a setup. So you can put an entry order on your charts and wait. If it's triggered, fine. If it's not, you just delete it after, and that's going to be the way to go. guess that's the other step. So having alerts, very useful. If you decide that you will just look at the chart manually yourself every 4 hours, every hour, every 5 minutes, or whatever you decide, which I don't recommend, but whatever you decide, then you just look at the chart and you put your trades when you need to, okay? And when you put those trades, you want to, of course, look back at your plan. Does that fit your plan? If you're starting out, make sure that whenever you take a trade, you review your plan all the time, like step by step, everything. If you're more advanced, and if you kind of remember your plan really well from the past few years, then maybe you don't need to do that. But if you're starting out with a new plan, make sure you go through it all, make sure you understand all the rules, and that will kind of stop you to take trades that are impulsive and without real reason to take them. So that would be very useful. Now you take the trade, that's fine, you've taken that setup, you've entered, let's say. Now we need to go to the other part, which is the last part, the most, I think, crucial one. And we call this journaling. Now journaling means that you will take your trades, wait till the trades close if you want, or just do it now, whatever you prefer. Take that trade, put it in your journal automatically. It doesn't matter if it's not, I feel like it, I don't feel like it. It's you put it automatically no matter what. Because you want to build a track record of trades. And that is not to share with other people necessarily. That's for yourself, to keep it for yourself. To see what mistakes you've made, things you can improve, what happened with that trade. Did you make a stupid mistake you could have avoided? Or was it like a perfect trade that you would take all the time? And if you note this down properly, if you break this down into categories of trades, whether it's good or bad, winning or losing, then you allow yourself to find ways to improve. So find ways to cut the bad trades and improve and take more of the good trades. Every trade in those categories. So that's very helpful. Now I personally use a tool called Trello, and Trello allows me to put some boards with some different categories of trades. I put some screenshots there, so that really is helpful. But if you just want to go with kind of my fixed book, there's a way to do it. I'll put some, like, 2 videos below on that topic. So one is with Trello, the other one is with my fixed book. Both ways work. You use whatever you prefer. I use a combination of both, so I kind of have more stats and at the same time see the trade set up on my Trello board. You decide what you want to have, but that's the other step. So you will find if you skip any of these parts, which we talked about, the 4 or 5 parts, chances are you're not that clear on your trade, or you might take bad trades. So if you go through this all the time, you will improve your trade setup, you will improve your accuracy, and hopefully get more winning trades. So I hope that makes sense. Comment below with your thoughts as always. I want to get your questions below in the comment section. Here are a few comments from the past video. I appreciate you guys for leaving comments as always in the comment section. Subscribe if it's not done yet, and I'll catch you back here in Krabi tomorrow. Ciao.